Let's talk about the top 7 stocks for 2025, and I'm not going to hold you hostage in this video because your time always comes first. Value comes first, and analysis comes second. We don't have YouTube monetization, so it wouldn't benefit me even if I wanted to hold you for another 2 or 3 minutes on a video you don't want to watch. Over the past few years, we've invested a lot of money in Palantir, Tesla, and the S&P 500, making me less concerned about ad revenue on YouTube. The list of stocks is straightforward, and I'm giving it away at the beginning of the video. Yes, I'm not lying. Write this down: AMD, Google, Nvidia, Tesla, Palantir, Amazon, and Meta, in no particular order. In case you're wondering, the order was chosen randomly. First, I hope everyone had a relaxing and enjoyable new year with their family and loved ones. 2024 was an interesting and profitable year. As we analyze these 7 stocks, let's see what 2025 holds for us. Let's start with AMD. AMD is probably one of the most misunderstood stocks in the market. I know it's not great and has problems, but it's misunderstood. It doesn't have the hype or hoopla of stocks like Nvidia, Palantir, or MicroStrategy. It's not a hype name right now, and that's exactly why I'm interested. I like stocks that are beaten down and not hyped up. Remember when I was excited about Palantir at $6 when nobody thought it was a good bet? You're getting AMD at a 23.4 forward PE, which is not expensive. A PE below 24 for a company like this is quite interesting, because Nvidia is the gold standard in the industry for data centers. Broadcom is probably second, and AMD is a distant third. However, AMD is priced like dead, as if Broadcom and Nvidia have taken 100% of the market. That's far from true. While AMD is significantly behind, they're not dead in the water yet. Unlike Nvidia or Broadcom, AMD doesn't need to dominate the market. It just needs a piece of the pie. This stock needs to be part of the game for it to do very well. The data center market is massive. Oracle's founder, Larry Ellison, recently mentioned he was begging Jensen Huang for more Nvidia chips. Nvidia is currently monopolizing the market, but there's limited supply and sky-high prices. Many companies need chips, but not everyone can afford Nvidia's prices, and there simply isn't enough supply to meet demand. AMD can offer a cheaper product and solve capacity issues. Look at AMD's track record. They went up against Intel, carved out a piece of that market, and overtook them. AMD doesn't need to be number one. If they can solve the price and capacity problem, they'll generate significant revenue, which is already happening. AMD generated $7 billion in data center revenue last year. This year, management is guiding for $14 billion, doubling revenue. While these numbers aren't Nvidia level, they don't need to be. Net income over the past 12 months grew from $200 million to $1.8 billion, an 800% increase. Operating expenses dropped by 1.5%, operating income rose from $90 million to $1.4 billion, and debt fell by 40%. AMD currently has $4.5 billion in cash and $1.7 billion in debt, a setup I love. According to my DCF, the current price of AMD should be $155, but it's trading at $122, giving it a 26% upside. This isn't massive, but it's a clever play for a well-established company. Over the next 5 years, my price target ranges from $131, bear case, to $237, bull case. The second stock out of the 7 is Google. It is trading at a 21.54 forward PE, even lower than AMD, with a 31% operating margin. Their advertising business accounts for 80% of revenue and has incredible margins. Google Cloud is expanding, YouTube is growing, and AI is becoming a significant focus. But before going further, watching until now shows you are interested in the next money-making opportunity from the stock market. If yes, kindly subscribe and give this video a thumbs up so the algorithm will recommend it to those looking for similar opportunities. Let's continue with Google stock. Regulatory pressures have held Google back, but I believe those pressures will ease with the current administration. Fears of a recession hurting advertising budgets fade as inflation decreases and a soft landing seems confirmed. Google holds $100 billion in cash, has $11 billion in debt, down 60% over the past 12 months, and net income grew 41%. My DCF price target is $228 versus its current $190 price, a 19.5% upside. In 5 years, my price targets range from $222, bear case, to $333, bull case. Nvidia is pricier, trading at a 32.4 forward PE, but its 63% operating margins are insane. Nvidia's H100 chips are the industry standard for AI data centers, and the gaming segment is essentially free. With $35 billion in cash, $10 billion in debt, and revenue up 200% year over year, Nvidia is a powerhouse. My DCF valuation is $175, with its current price at $136, offering a 28% upside. Over 5 years, my price targets range from $190, bear case, to $354, bull case. Looking forward to catching the stock market profitability trend in early 2025, then Amazon's AWS business is the growth engine, not retail. AWS boasts high margins and significant growth, with free cash flow up 150% year over year. My DCF valuation is $287, and Amazon currently trades at $222, a 29% upside. Over 5 years, my price targets range from $278 to $504. Moving to the next on the list, Meta has a 23.6 forward PE and a 40.7% operating margin. Their ecosystem, WhatsApp, Instagram, and Facebook, dominates advertising. Meta is a fortress with $70 billion in cash, $28 billion in debt, and net income up 86%. My DCF valuation is $680, with its current price at $598. My 5-year price targets range from $978 to $2,148. The other two stocks making it 7 out of our list are Tesla and Palantir. Palantir was covered extensively in one of the most recent videos. Do well to check afterwards. My targets are $1,400 for Tesla and $500 for Palantir. Meanwhile, let's check them out. Tesla remains one of the most exciting companies in the world. It's trading at a forward PE of 51.6, which might initially seem expensive. However, Tesla isn't just a car company, it's a technology and energy giant. Tesla continues to dominate the EV market, with a global market share of around 17% in 2024. Their relentless innovation, such as breakthroughs in battery technology and manufacturing efficiency, sets them apart from competitors. They are operating at incredible scales, and Tesla is rapidly expanding its production capacity, with Cybertruck and new Model 3 variants boosting consumer demand. Tesla's energy business, including solar panels and megapacks, is a sleeping giant. The megapack segment, in particular, is growing faster than many expected as the global transition to renewable energy accelerates. Tesla's AI development is another hidden gem. Its Dojo supercomputer could unlock vast opportunities in autonomous driving and AI-based services, providing Tesla with an additional revenue stream outside vehicle sales. Revenue grew by 25% year over year, reaching $110 billion. Free cash flow is strong at $9.4 billion, allowing Tesla to reinvest heavily in growth initiatives. Though slightly compressed due to competitive pricing, operating margins remain solid at 17%. Tesla holds $28 billion in cash and only $3 billion in debt, giving it a fortress balance sheet to weather any macroeconomic headwinds. According to my DCF analysis, the intrinsic value of Tesla Incorporated, TSLA, is $223.49. This Tesla valuation is based on the model discounted cash flows, growth exit 5Y. With the current market price of $410.44, Tesla Incorporated's upside is minus 45.5%. The range of the intrinsic value is 134.48 to 752.6 USD. Over the next 5 years, my price targets range from $1,275 bear case to $2,500 bull case. Tesla is not just a bet on electric vehicles, but also on the future of energy, AI, and autonomy. The last stock out of the 7 on the list is Palantir. Remember, I earlier said they are all arranged in no specific order or performance. Alright, Palantir has firmly established itself as a leader in big data and AI-driven solutions, with its government business continuing to grow. However, the real growth story lies in its commercial sector. Over the past 12 months, commercial revenue grew by 45%, driven by increasing adoption of the Foundry platform by Fortune 500 companies. Palantir's integration of AI into its platforms has positioned it as a front-runner in the race for enterprise AI solutions. The company recently announced its AIP, Artificial Intelligence Platform, which enables organizations to deploy AI models securely and at scale, a game-changer for industries like healthcare, logistics, and manufacturing. Palantir's operating income reached $785 million in 2024, up 60% year-over-year. Free cash flow turned positive for the first time, at $300 million. The company has $3 billion in cash, no debt, and a 30% operating margin. Remember, this isn't financial advice. Research these stocks and make informed decisions. Learn to save more, invest longer, and pick better. Remember to subscribe for more stock market analysis. Happy New Year! See you in the next video.